All right, guys, what's up? Welcome back to another video. Thanks for tuning in. My name's Alex. We're going to be going over four stocks for next week to sell options on. Not much is going to be reporting for next week, as we can see on our screen here. A lot of Chinese companies. Nothing really. Also, we got some retail with Dick's, Best Buy, and Gap. But overall, not much is happening. But there are some potential plays that we could do for next week. But we do have to be careful because right now, market is at pretty high levels. So we don't know what's going to be happening. But the first stock on our list is going to be Zoom, reporting earnings Monday after the market closes. So Zoom, obviously, is one of the most popular stocks for the pandemic, going from around like $100 per share up to highs of almost $600. All-time highs actually. I can't really see on here, but as we can see here, it hit mid 500s. Crazy gains. But this past year, it's been slowly declining, and that's because of basically people moving away from remote work, going to in person. But we do have to realize that Zoom is a solid company. It's definitely here to stay, and it really established itself during the pandemic as some reliable software. So Zoom, personally, I'm selling some cash gear puts on this stock. I have a $200 cash gear put for next week, and this is going to be for larger accounts because you do need $20,000 of collateral, and it's going to be about 1% return a week when you collect the $173 premium. So in order to collect the full premium, Zoom has to stay above $200 per share, which is Zoom currently is $250. So it has quite a bit of room to fall. Pretty big safety net, but we do have to understand that it can continue going down. So $200 per share, I wouldn't mind picking up some shares at that price point if it does happen to dip below it. Next stock on our list is going to be FUTU Holdings, reporting earnings. Reports earnings, let's see, Wednesday before the market opens. And this is a Chinese company that engages in online brokerage and wealth management services. And just like the other Chinese stocks, it has been giving up most of its gains in the past year. As you can see, past year is only up 15% compared to where it was up 300% back in February. And it's been pretty volatile as well as the other Chinese stocks. But overall, if you're willing to take the risk, this thing could be a good dip buying opportunity. So if you want to take that risk, go ahead. If you want to sell some cash gear puts, premiums are pretty high, as we can see here. We can sell a $45 cash gear put, 88% chance of profit, and about a 1% return in a week, which is pretty sweet. And the stock has to drop over $10 per share in order for you to start losing money. So there's a pretty big safety net there. Next stock on our list, Xpeng, ticker symbol XPEV, which reports earnings Tuesday before the market opens. And this is a Chinese electric vehicle company. And alongside the other Chinese companies, they've been pretty shaky, but Xpeng has been doing decently well, and it definitely is a good EV manufacturer for Chinese vehicles. So if you want to sell some puts on this stock, we can go pretty far down. $40 cash gear put, 87 chance of profit, and collecting about a 1% return in a week, which is pretty sweet. And you have a pretty big safety net as well with this stock. The stock has to drop over $7 in the share price in order for you to start losing money. So next stock and final stock on our list is going to be VMware, which reports earnings Tuesday after the market closes. And VMware, it's been pretty shaky. Overall, it's been pretty shaky. It still hasn't reached all-time highs even after the pandemic. But VMware is a solid company. I've used their software before for virtual machines, and they're just growing. Fair market value from Morningstar values it as $175 per share. So there's a lot of growth potential with this company, and it's already taken a pretty big dip the past few months. So it's definitely priced in for any significant drops. So it could be a good dip buying opportunity if you just want to buy and hold shares. I will highly be considering it. And it's getting to a pretty low level where selling a cash you put is definitely going to give you a lot of premium. We could do something like a hundred, and the strike prices are really weird with the 0.6. I'll probably stick with some solid numbers like 115. That one's gonna be a bit riskier. $155 of premium, or you could do like 110 where you're not receiving as much, but it's a bit safer. You can choose whatever strike you want, but buying and holding shares could also be pretty good as well, considering how far the stock has already dipped. So that's about it for this video. Quick update on the earnings for next week. Not much is reporting. A lot of Chinese retail as well as some software companies are reporting next week. Please leave a like and comment down below what your thoughts are. Thanks for watching.